Good morning and welcome, everyone. This is John Person. First thing we do is we start off with our planning and scanning sheet, and we're going to start straight from the top. Daily positive thought. It doesn't get any better than this. Just read these sheets, learn to understand these sheets I put out, study these sheets, use these sheets, and you'll be glad you did. These sheets are designed for our members and a community, and we put it out every day. But on planning and scanning, we put out what we think is good for the overall markets. Reports and events. This morning we have had already had the Chicago Fed Index. Janet Yellen is speaking at 9 a.m., which is now. Then we have the PMI Manufacturing Index is out at 9:45 a.m. And then Richard Fisher speaks at 1:45. That would be a p.m. So I do have a typo there. So I'll change it on my sheets. I suggest you do yourself. I put these in Word document. I don't PDF them. And the reason I do that is so that you can kind of change things out, print them around. When I insert a chart, it's just easier for the user. End of story. In addition, we have for this week important elements that are coming out. Home price index, home sales, consumer confidence, and another Richmond Fed survey. Durable goods, the petroleum report Wednesday. Thursday is GDP. Weekly jobs, pending home sales, KC Fed manufacturing survey, and of course Friday we get income spending. But what is Friday more importantly? It's the last day of the month, it's the last day of the week, it's the end of the day, and it's the end of the first quarter. I don't know where this year just went, but 90 days just flew right by us. March 27th, notables, you have the USDA livestock report. So not this Friday, excuse me, the Friday, we have March 31st, the USDA for grains and meats. This is going to be very important to remember. Number one, we're going to be taking a look at what the hog and pig report is, the cattle report. We're also going to be looking at what quarterly grain stocks are, what the ending stocks are, but we're going to more importantly hear what farmers intend to plant. Now, I do consulting work with several different I would have to call businesses, companies, and one company that I was going to be speaking with is EarthSat Weather. They're a private weather forecasting company. I was speaking at their conference. I generally do. I've spoke at their Houston Energy event, and Chicago, this is the Ag one. I'm not going to be able to attend that. As many of you know, I have a surgery scheduled, and there's some complications. So long and the short of it, I found a replacement for me. In talking with the chief meteorologist, I said, hey, I love being invited as a speaker. You guys do a great job. I've had a relationship with these guys since 2005, and they've used me for my price projections longer term meaning quarterly and 6 months out in both energy and ags. They respect my work. The neat thing is that I get to hear about their work, and I'm going to share that with you right now. They are expecting about the same type of weather patterns over the next 90 days as last year. But they think it'll be a cooler, wetter spring in the Midwest. In case anyone didn't hear about this, if they said, you know, icing in many of the lakes in the north, especially Lake Michigan, is going to wreak havoc on weather patterns. It's going to be cooler than normal, and they're looking for an increase in precipitation. What does that mean to everyone in this room? That means if farmers can't get their corn crop in first because of planting delays, they switch to soybeans. And if they switch to soybeans, guess what will happen? You will see more soybeans planted, thus a more bearish outlook. The USDA is the head of the government's division that does the reporting, and I forgot his name. He actually speaks there, so it's really an honor to speak there because I get to meet the head of the guy who's in charge of gathering all the intel for the USDA and releases the report. In any event, the USDA is looking for lower prices in grains due to reduction in demand for both poultry and meat. So combined, this could be a very interesting spring, summer, fall growing season for the grains. Lots of opportunities there for us traders. So anyway, I want you guys to know I have kind of like the finger on the pulse with the people in the know, so to speak. I mean, the guys from the USDA is not giving me insider trading information, but I do get access to their reports firsthand. And just as they're released, but that way I don't have to really read through them. As far as the weather, if weather is a big event, and if you don't think that professional institutions, Grains, Archer Daniels, Midland aren't paying attention to weather patterns, think again, because that's who exactly is on their payroll that they are some of their clients. So that's EarthSat weather forecasters. Anyway, I wanted to bring that to your attention because I had to talk to Chris over the weekend, and Chris Hyde is his name. He's the chief meteorologist with EarthSat, and discuss my replacement and what everything was going to happen. Anyway, we have earnings out before the market. Sonic Restaurant after the close. Weekly high close dojis. AMD, Best Buy, Coach, Quest Diagnostic, LNC XRX, which many of you may not remember, Xerox. And look at these weekly low close dojis. Abbott Lab, Cardinal Health, Facebook, interesting. Regeneron is a biotech, Vertex, and Walgreens. And if you go back, seasonality is strong. We posted this several weeks, and we'll change this at the end of the month for the new quarter coming in, what seasonal tendencies are. And I have a huge list of new changes, potential. So as you can see, this was extensive work over the weekend. The ES, the Russell, the Dow, the NASDAQ, bullish and bearish. What is it going to take for trend changes and continuation? Well, obviously, the market's up in the S&Ps, the Russell, the Dow, even with Friday's decline in the NASDAQ. Why did the NASDAQ go down? You and I, if you've been ever attending these weekly publications for the last few weeks, you know that we talked about the effect the biotechnology has on the NASDAQ. In fact, if you go back and review last week's session, and I'm just going to bring it up here to your focus. This is last week's. When I say read this stuff, it kind of helps to read this stuff. It's because for the week, we said notables. This is last week's sheet. All right? Last week's sheet, notables. Weakness in Amgen, Celgene, Biogen. Intra-week rallies could give opportunities for weekly credit call spreads, especially Biogen. Strength in regional banks, insurers, casualty reach, watch for weakness for long entries. That was last week's notes. So we picked out, and we have been discussing in this room, and if you take a look at most of the weekly high close and weekly low close dojis, you know these are very prominent triggers for entries that you guys can decide to take on yourself. Now, one of our students the other day said, hey, we have also been talking about retail apparel, especially as women have been entering the workforce. And I don't know if you guys remember, way back in February, and not that long ago, 224. But we talked about weekly high close dojis. Ann Taylor, GM, McDonald's, PDCL, low close dojis, Comcast, Citibank, Bank of America. Well, if you take a look at what happened with these areas, all right, if you take a look at these areas, and we even had LinkedIn, we were looking for credit put spreads, didn't get there. We did take Tesla and had a small loss there. I mean, I'm pretty well transparent in what we are looking at. And more importantly, it shouldn't be any surprise to anybody that most of these companies, even GM with their problems, still have done well. But it's Ann Taylor, which was a weekly high close doji in that retail sector. So what I'm trying to do is to make sure that if we have a seasonal trend, in other words, if retail XRT is going up, and we put out a weekly high close doji that's a stock in that sector, you're bound to do pretty well. In fact, I think what we saw happened, and I don't want to go back, but you guys can certainly do this, but Ann Taylor was one name that, since we had that weekly high close doji back on the 24th, the stock went from about 34 to about 42. Friday's gap higher opening. There was just so many stocks that defied the law of gravity with Friday's market action that I think it's notable that we must be doing something right with our analysis, because we certainly did call it, and there's not many people did, and there's a lot of confusion out there in the world. I'm not bragging. I should. What I'm saying is we definitely are on the road to doing the right type of analysis. I think the way the markets have been behaving is almost as if the institutions, we have been able to like put a radar on them before they act. And it's almost as if they may have something very similar in nature to the types of analysis that we're doing, that we're supplying to you. Because quite frankly, there's been a lot of sectors that we've been just dead right on. And identifying the weakness in the biotech to not just the week, but to almost the day that this thing collapsed, I thought was pretty impressive for myself. So that's why this week's sheet says, guys, study this stuff. And that's the daily positive. That's today's positive thought. Just read and learn to understand these sheets. I mean, everyone should know what an LCD and a high CD means. High closed doji, low closed doji. In fact, I'm looking for CRE and Cirrus for last conditional change or PPS buy signals. All right? So with that said, this week I should probably put one of these. So we'll probably talk about a little bit about that for this week. We don't have buy signals, but I see some really neat stuff happening in CRE and Cirrus logic. And we're looking for a last conditional change breakout or close above prior highs, or we're finally looking for a PPS buy signals. Next, there's a lot to discuss in this sheet, but we've got copper, in fact, which last week formed a doji. If you watched the daily or the weekly videos, I went through extensively on copper. Copper's had a complete meltdown, but we do have a situation. It's holding against the fourth quarter of 2009's low and 2009 last conditional change candles low. So there's support that goes back at copper's current prices since the fourth quarter's low was made in 2009. We understand the weakness in China. We've been talking about that. But I think it's come time that it's finally maybe forming a bottom in here. But you want to watch daily closes above 305.70. That might give us a high close weekly doji or a PPS or an LCC reversal. Hogs, we have a daily low close doji. I'm looking for an uptick to sell near 131.10 on an intraday trigger. So if hog prices, and that's June, remember what it says here, HEM, M stands for 14. Cattle, LEM, stands for 14. So you can go through these sheets, and then all of a sudden, if you notice here, I've got in capitals, ES, weekly close, so that's the end of this week. It's going to take a weekly close below 1825 to turn this bad boy to the downside unless something else changes between now and that trigger. TF, it's going to require a weekly close below that to generate a last conditional change weekly. So these are all the weekly moves that are going to require. So we have dailies here, and then I've put weekly. So I went a little overboard on looking at the short-term, long-term condition of the market. Apple, Friday, we talked about watch for a daily PPS buy or a breakout above 539. I put that in for Friday's sheet. On Friday, I said if you wanted to anticipate for a reversal in Apple, you can go with a very small position with a 42 or 50 delta on June calls. Remember, if you're doing a stock replacement, this is a $500 stock. So granted, outright calls are going to be expensive. But you want to make sure in a low implied volatility environment against historic volatility, if it's low IV, then you want to be looking at more buying opportunities, and that's what we identified. So notice that we don't have any credit put spread opportunities here because it didn't make sense for any, not that you can't make money if the market goes up in a credit put spread, you just have a better chance of making money on maybe a call spread. So we gave you several choices on Friday, which you should have been able to be filled on anything here or here, and I said for a small position. And I know everyone kind of saw Apple go from like 530 down to 528, 527, whatever it was, intraday low. But boy, I don't know if you saw the close, because I didn't, because of the darn PT, physical therapy. But I tried, and I had all intentions to. But I'll tell you what, that was pretty impressive because Apple, guess what it did? It did form a PPS daily buy signal. And to me, I think that bodes well. We are entering a seasonally strong period of time for Apple, number one, which we did identify that. The reversal in Apple was pretty impressive, and it did have some pretty strong volume. So now two things you want to look at. If you want to wait for a last conditional change candle, you certainly can. And the last conditional change candle, the last lower closing low came in, or it's right above that 539 level, which was made on March 13th. So anyway, there are, that's today's sheet for the week, and there's a lot of information there. So if you don't care about bonds, euro, crude, gold, cattle, hogs, or copper, don't read it. If you don't want to look at day trading, or if you don't want to look at trading futures, that's fine, but do recognize what these are, and you can set alerts on your own computers. But that's what these sheets are designed to do. We still have seasonally strong transportation, oil, XOP, dollar index is still seasonally strong. The KRE, the KBE, that's regional banks, the big banks, IYR, ITB, RLX, XRTs, retail, weakness in bonds. The seasonal weakness starts to succumb in the bond market, and I should probably take that out by the end of this week. Also, the IXTC is telecommunication, BTK, in case you didn't look that up, drug stocks and biotech, which we've mentioned for several weeks now since this has been added, and that was through the end of March. So these are the seasonally strong and weak period of time. Hogs, the reason we're looking at a low closed doji, because seasonally strong through the end of March, it's coming to the end of March, and hogs begin a seasonally weak period of time. And we just saw the hogs generate a daily low closed doji after an insane run to the upside based on the little piglet virus. So there's our sheets for the week. Let's take a look at the condition of the market, not just on a individual stock index, but on all the stock indexes. And the first one to take a stake or a look at is, what did the weekly look like with the market internals on the NASDAQ? The NASDAQ, a lot of people would apparently say, boy, this was an ugly, ugly, ugly breakdown, except for it's still on a weekly basis closed positive. Pretty impressive, whether you know it or not. Pretty impressive. Good morning, Mimi. Glad to see you here, sweetie. Look at the advanced decline. Now, we had a huge significant breakdown, and as we've talked about, the weakness that would weigh on NASDAQ would, if it was to come, would come from the biotechnology sector. And as everyone knows, it did. And it's probably been in the news, and no one can figure it out. We did about 2 weeks ago. We did last week. And that's where it's actually on those sheets. So if you're not reading the sheets, or if there's too much information, then just focus on the weekly sheets at hand and make notes to yourself and follow up with it, because the information is there. Looking for weakness in biotech and strength in banks, and that's where that sector rotational correction idea was coming from. The fact is, if you look at the seasonal tendency on or about in March, if you see the right when it came into fruition, is basically due to the fact of that drug and biotech sector. So we did have that pretty much queued, but I don't think the media wants to talk about seasonal analysis in this day and age. I just don't know why, but maybe they don't believe in it. But seasonal analysis combined with technical analysis is important. You use both, not just one. In addition, this is the weekly S&Ps, and we did see a nice, even though we backed off the highs, and you guys had a great day trade setup. Yet on Friday, we set it up for you guys. It needed to crash below, I believe it was 59. I could be wrong. Maybe it was 58. Was the last conditional change, and sure enough, that thing happened after lunch hour. But here's the deal. From a weekly basis, the volume was still pretty rock solid. The advanced decline was still really pretty rock solid. So we don't have, in fact, a blow-off top formation, and I just think it's still a sector rotational correction. I think we still have to be on guard. We just want to look for, if you're a stock trader, you want to focus on the sheets and the stocks that are seasonally strong, or stocks that are in sectors that are seasonally strong, and that's where the weekly sheets will help you. All right, So let's take a look now at the Russell. On a weekly note. On the Russell, it almost looks as if, and we did this exercise the other day about what would the market, where would it be if we looked at percent, instead of pricing terms, percentage terms. And we're almost developing, you know, a little coiling effect. Last week I also made mention, while I have a lot of concerns because we have some divergences in volume, I'll tell you what, man, last week we, even though we don't have higher prices, we had matching or close to volume prices. And I'll tell you what, we're starting to see confidence come back into the market. If you take a look at this peak in volume right here, from that high, prices have made higher highs. Volume did too, just last week. So we don't have a volume divergence anymore. It worked itself out. And we don't have an advanced decline divergence anymore as well, because we did see a higher level and it's above our weekly moving averages. So we could see a continuation to the upside, which could be very strong, especially led by the small caps. The NASDAQ, not so much, but it could come from technology. A lot of people are talking about how the NASDAQ has weakened and it's the leader of the market. What a lot of people don't understand or maybe remember is the NASDAQ has other stocks in it, particularly biotechnology. So what would happen if Apple rallied, and what would happen if the biotech, which some of the indexes were down 11% last week, what would happen if some of the biotechnologies, you know, saw a minor dead cat bounce? They would improve. And so we could see the NASDAQ pop people in the face. So with that said, even the New York Stock Exchange Composite Index, if you examine this closely, we had a breakout to the upside with volume, and we had a breakout with the upside and the advanced decline. And we did not make a new closing high for the week. Volume precedes price, and this AD line is still, no offense folks, still relatively strong. So now I've got more sectors, not just the small cap, but blue chip with S&P 500, and now I'm looking at the NYSE. I mean, if you want, we'll take a look at the Dow, but remember, every Dow component stock is in the S&P 500. We were concerned about the Dow at one point because it has a double potential top in the market. But it also has and what I've said, a kind of a consolidation pattern. It's gone from trend to consolidation. If you just took out this long shadow here, that one little week, if you look at where the average range of open-close relationship has been, it's contained within this green box. Everyone can see that, right? So it's been uptrend, actually sideways, but because of Friday's action, look at that advanced decline and look at that volume. So I'd have to say this does not give me a bearish outlook in the marketplace right now. As I said last Thursday to the trade station Thursday morning, it's very unusual to see the market peak out for the year in March, but I am on guard because we are dealing with quadruple witching, and we did have some developing situations that we needed to focus in on, such as AD line, such as volume analysis on all the indices. Not many people in their right mind would have picked out looking on Friday as the NASDAQ was falling, crashing, diving, destroying, depth destruction, and say, I think we should look at going long Apple. But I think in this case, it warranted, because even though we do have on a daily basis, we had this decline in volume, and we had this destruction of advanced decline. One of the things that I think was, in essence, excuse me, this is something, let me get rid of this here. All right. And I think what the concern is that we do have a lower high developing on a daily chart. And the daily advanced decline was giving us a kind of like a bearish reading and the volume. But the NASDAQ, I think we worked out the reason why. And we all saw what happened with the one major sector that weighed on that. And it was in the of course, biotechnology. Now, let's take a look at the seasonality of the market. And yes, while we go down from the 18th, which is last week, and this is a daily chart, to about the 20th, and we kind of turn around. I mean, in history, from that the 18th high to that low, the market seasonally on average did follow what it did. And now it tends to move up. So we're not really looking, the fact that the market was overall down, the volume kind of did show that as well, but volume did not go make any destructive moves. In fact, the advanced decline said more stocks in the S&P 500 held than didn't. And of course, I think that bodes well for the S&P 500. On a daily basis, the market was down from Thursday's gain to Friday's close, but not for the week. And so with that said, we're still game on. There'll be a lot of traders, and there'll be a lot of general small public traders who will be looking at this volume histogram, and they'll be saying, oh, this move is no good because this uptrend is on weak volume, and they will be looking to sell any and all rallies. And how do I know that? Because as I talked about last week, I've been going around the country, and for a few years, not just this last 3 months at New York Traders Expo or San Diego or Scottsdale, but I do this all over the Long Island Stock Traders Group. I mean, these guys are getting trained by investors that were like, I guess they're in an offshoot. Great people, pretty savvy, guys know their stuff, but they were all like scratching their head. They were like deprogrammed computer robots when I said, if you're confused about volume, how many are? A lot of them raise their hands. They say, I can't figure this out. Every time I want to buy something, it's on low volume. I don't get in. So, well, one of the reasons could be the theory that I've been teaching and sharing. Just one of the little techniques is the fact that maybe the volume is being masked because people are using optionable strategies, number one, and they're using other derivative products. No one has to buy just all the stocks in the S&P 500. They can use options. They can use the OEX, they can use the SPX, they can use the spiders, we can use the big S&P futures, the little S&P futures, and options on everything in between. With that said, when you compare a volume up day, regardless, it's just defining what the trend of the market is. If you compare a volume up day to a volume down day, that's where the on-balance volume will give us a better, truer reading of the trend of the market. Now, I know that this trend on a daily chart was up. It was actually from here to here. It was down a little bit. And so that's what this volume reflects, but not significant. So with that said, if we do get a volume spike over the next 2 days, and a volume spike would be over, say, the 18th. So a divergence situation is if we close above 1864, which was on this day right there, if we close above 1864 and we don't see a rise in the volume, and you give it a 2-day effect, then we've got a little different situation and more maybe sideways grind on a daily basis. But it is right now, that to me, the overall health of the market, I think you stick with your weekly sheets, and we should be fine, and we're still focusing on looking at Apple to the upside, and that's what I see here in the market. Okay? Now, I'll go to newsletter, and I know the market's going to open up in less than a minute. But this week's planning and scanning sheet is pretty detailed, pretty in-depth to give you guys some good insights. So when you downloaded, for lifetime members of Genesis, when you download the new, this page that says newsletter, see it was published 3/23, so you know I was working yesterday morning at 9:52. And we got bells ringing all over the place. All right, so here's what the last conditional changes are, and I think that number one, looking at the weekly and then looking at the daily charts will be kind of instrumental. We still see a close over that this candle right here, this red candle right there. You get a daily close over that, folks. I think you're going to see at least a 3% move in the S&Ps from last year's close. So if you think about it, from 12/31, what is 3%? 3% minimum puts us at somewhere around 1890. something like that, 1893.5. That's about 3%. That's just a 30-handle day from here. Now, I'm not saying that we're rip-roaring bullish, but think what 4% would represent. That would put you at around 1912. This is going to be an interesting quarter, but I think 1890s, I mean, if you think about it, what if we took out this high right there? That high is 1880. So you take out the high, a lot of stops above the market, and then, you know, we'll take a look at the market up there. But that's what I would be targeting, I think, is a realistic percentage valuation in the marketplace that we could come up to. So if we take out that last conditional change high right here, which is on your sheet, 68.5, you take that out, there's some decent upside. Okay? All right. So I wanted to also address just briefly no, it wasn't. Where is it? Come find me, Daddy. Come here. Cattle. Here we go. We do have a double top in the market, but notice that we're pricing at 136. So the market did stop almost dead on a dime at that last conditional change support. It breached it, but came back through it. You watch that market another time to get underneath that level, and this thing's going to have some more significant downside. And I mean, June could probably see, for whatever reason, at least back into this zone right here, because after all, that's where we were in February. It's not that unusual to see prices come back to old points of interest when they enter a seasonally weak period of time. But you want to probably, you know, watch to see if the market, we should come up, if the market is going to maybe try to pause a little bit, you want to see if the market can, you know, hold those moving averages. Absolutely, we don't want to see a breakout above that high right there, and that's why those annotations are on your charts. All right. If I change this to lean hogs real quick, here's the doji. Here's the low close doji on a daily basis, and as you can see, towards the end of March, that's when we see that seasonal peak. At the beginning of March, we identified that the market's bullish, but by the time the market had already rallied, there's no way I'm chasing a 20, 10, 15-point move to get long the market because, you know, based on the beginning of the month of February, if you have to take a swing low stop, you know, even if you take it below a last conditional change in both moving averages, you know, not a big deal, right? So it's that under both moving averages, small $3,400 risk just as a, you know, overnight position. That's why I avoided hogs like the plague, or piglet virus. I avoided trading them from the long side and the short side. But now I think we've got a reasonable setup. So I'm looking for a market that has such a strong trend, folks, that you're going to see consolidation. It just doesn't go, I don't think, in my opinion, that type of move straight down. So it should be choppy and sloppy. Friday's action, just to give you an idea, from the high to the close was about $1,000 move. So could it go back up and test that high and chop around? You betcha. So look for the market to run up near this area. It's already given us a low close doji for a longer term perspective. Look for a pop up into this area here, and then look for intraday sell signals, and you might find yourself full of surprises in the pork market. All right. So let me now switch over to our trading room page. All right, so for today, I'm still thinking that, you know, the folks that are looking, I think what's going to happen is the folks that are looking for the weakness in the NASDAQ, and there goes Apple. I hope you put a little something, just a little taste, even though it was a little taste on Friday morning and I wanted to buy more on the close. I hope you got a little taste of some Apple. Did you guys follow my lead on that Apple in the morning? I know we had a latecomer to the room, and I don't know who it is, and it's not important, but they were traveling, and they were in an internet, they were in the room, in the hotel, and, you know, and I kind of like, you just got to let me know what happens in life. All right, good for you. All right, that's good. All right, good stuff, brothers and sisters. That's good stuff. So let the world figure out what's happening with biotech and the NASDAQ. You guys stay with me, and we'll get the real skinny on our market analysis. As far as day trading is the market's concerned, I mean, real simple. You know, a three-handle move, 12 ticks on a 4-lot, $600 and change. I mean, we got to be a little careful because no one ever says, well, what's my risk? If you have to risk 3 points to make 3 points, you better have a pretty good system trading in the market. A lot of times we're getting these big moves, you know, right on the close. They get these little breakout moves. And so I need to wait for some patterns here, but I bet you can tell that I'm not going to be bearish today, okay? I bet you probably already know that. I'm looking to buy S&P. In fact, when we went over Friday, before I left for that, and I got another appointment today, and I'm not looking forward to it. I really am not. Supposedly they say they're doing good for me. I have no clue. But I think I left on the 60-minute chart the annotations. I said if we break below, oh yeah, it was 67, not 57. I don't know what I was thinking. I said if we broke below that low, we took a quick buy signal Friday, and I said, listen, I don't like this because there is no volume associated with it. We took that. You probably took that buy with me. It was like nominal, and I said I'm not looking to get short unless we break below that last conditional change candle. And man, it gave a 60-minute low close doji. It broke down. Unfortunately, it was when I was getting beat up, and I hope you guys enjoyed it or did something with it, because once we broke that last conditional change, that was incredible. What do you think is going to be resistance today now? What do you think what do you just take a guess? What do you think? From the point of breakdown, that'll be the first test of resistance. Now, if this market's going to fail in the S&Ps, what do you think might be? It's going to need to break below 56. So a trend line break on an hourly basis. We have a small developing trend. So maybe we can come back down sometime today, test 59, the midpoint of this benchmark, this breakout. Look for maybe a pullback in here, and the rest of the world will think the market's going down. You know, something like that. It's tested it enough today. But I think if the NASDAQ's still weak and everyone says the NASDAQ's the leader, let them think that. I think now you have difference of opinion. If the market's bullish, it should hold between the midpoint of the benchmark and the low. I just know if it breaks this, is also not just a benchmark, but it's a last conditional change. If it breaks this low, then we got to be a little bit more objective and say, and maybe it's got more downside here. On the other hand, if we take out what caused major support to go down, if we get a breakout above that level, sayonara, sweetie. Okay? This is the last conditional change candle, 1870. And then again, after that, you got 1874. You clear those levels, and I'll tell you what, it's clear sailing. And I don't think it might not be today. Who knows? It's the day after quadruple witching. But I can tell you this: I'm less bearish on the market, and but I am objective. And I know from a short-term perspective, this market is starting to carve a bottom. Support today will come in at these in between these levels. A break below 56. You know, granted, you might be giving up some profit, but if it breaks below 56, I mean, look where we might head to. This level in here. All right, so I'm giving you both sides of the coin. Pay attention for breakdowns below 56 and a quarter. Pay attention for breakouts above 67, and then we kind of stay contained in a chop and slop in between. I'm looking for this 60-minute buy signal. I'm looking for it to still be respected in the marketplace. I think, you know, we're not completely overbought in the market. It could just be one of these situations where the market stays a little overbought. Remember, markets can stay overbought, if you think about it, for longer than you and I can remain solvent. So it's price patterns, and it's volume, and it's looking at these last conditional changes that'll help me. All right? So we accurately predicted We said stick with the buy side, and we were successful. We said get the hell out of this thing because there's no volume on the rally. And then all of a sudden the market, it was after the lunch hour, and then an hour later a sell signal came, and then it was a few minutes after that, once it broke that 67, and that was that last conditional change that I left on the screen for you guys, big washout down the side. When I got back from physical therapy, a couple people said they did take that little short in there, and it was beautiful. Now, day trading and taking advantage of that short has nothing to do with Apple being up $5 today, does it? Okay? All right. Now, we've got a situation going on, Bill, thank you for reminding me, on oil. And I think oil, as it says in your weekly worksheet, I've got it right here. A daily close over 101 is that last conditional change candle right there. You break out above that, there's a lot of room up to 105. All right? It's going to take daily closes below 98.33, and so the market is in a buy signal. The trend is up, but remember, this is potential trend changes and continuations. What's going to get this thing going? It's still in an uptrend. It's in a buy mode. This thing is still, they're buying the brakes. They're buying the brakes. They're buying the brakes. The last 3 days, they've been buying the brakes. But you clear 101, that's a different story. All right, I think I've covered way too much information. That concludes our Monday. There was just a lot here for everyone. Good luck this week, and we'll have more identification of what's happening here in the markets. Everyone, have a great trading week. Thank you for joining us at this special planning and scanning, which is the last week, if I'm not mistaken. I could be. I've been known to be mistaken. But nonetheless, you know, I'm more focused on, as you can tell, the last few days of the month of March. Monday is the 31st, but this Friday will be really the last week of the quarter. But Monday will be interesting, and then we start a new quarter, new month, new everything on Tuesday. So everyone, have a great trading week. Thank you all for being here.